Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and the Fear and Greed Index. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also make sure to check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Now, the Fear and Greed Index is it's an indicator for Bitcoin that is fairly closely followed by a lot of people. And it is not my indicator. You can find it here. I will provide a link in the description below if you want to find it. And what you'll notice is that last month we were in extreme fear. Last week we were in extreme fear. Yesterday we were in extreme fear. Today we're in extreme fear. And then it begs the question, what does it mean to just constantly be in extreme fear? Does that mean that the prices are necessarily a good price or not? Because we've seen extreme fear on here for months now, right? For months. And the prices have only continued to deteriorate. Now, what I've done, and I've actually shown this chart a couple times on the channel, I believe at the very least, is we've taken, first of all, here's the price of Bitcoin color-coded by the Fear and Greed Index, okay? Now, you must remember that when we're in extreme fear or extreme greed, it doesn't necessarily mean that prices have to immediately bounce, because sometimes it just can be the beginning of a new trend. Look at this. The Fear and Greed Index hit in the 90s, at 95. In December of 2020, before we really had the parabolic rally all the way up into the $60,000 range, right? So if you only used the Fear and Greed Index and said, well, anytime it goes above 90, you're going to sell your Bitcoin. If you were to have sold all your Bitcoin when it first hit 95 back in December of 2020, you would have missed out on the entire move that came after it into early 2021 when we went up another 2x or more from those, or 3x or more from those prices, because we went up from $20,000 to $40,000 relatively quickly in January, so that represented a 2x, and then we went up to over 60K just a month later or so, which represents a 3x from that point. And so then the question is, well, if being in extreme fear or extreme greed isn't necessarily the best indicator of buying and selling, is there any way to mine the data to come up with something that might be? And I think there is. I think there's a slightly better way to do it. And of course, it is a lagging indicator. Like a lot of things, it is a lagging indicator. But what you can do is you can actually take a moving average of these things, of the Fear and Greed Index. Take a moving average. That way, if you just get 1 or 2 days where you're in extreme fear, might not really mean anything. But if you have months of being in it, then you can compare it to where it was in prior market cycles. Now, unfortunately, the Fear and Greed Index was only published in early 2020, in early 2018, as far as I can tell. I don't remember the Fear and Greed Index being around before that. It's possible that it was, and I just wasn't following it. But anyways, we only have data here that I have access to up until the early part of 2018. And so what I want to do is I want to apply moving average. Okay, we're going to apply a couple. First of all, we're going to look at a simple moving average. So we're going to take a look at the 90-day simple moving average of the Fear and Greed Index. Well, what do you notice? It's currently at around 27.61. 27.61, which is somewhat interesting considering that that's about as low as it ever got. Not quite, but about. Okay, if you draw a straight line as to where it currently is and compare it to 2018, you can see that we did go slightly below. We went all the way down to 24, and over here we went back down to 24 as well. Note that this was a 50% drop that came, so prices still went down a lot, but the Fear and Greed Index, the 90-day moving average of it, in fact, got slightly worse, but not that much worse than where we currently are. What you'll notice is that in a bear market, you'll generally see lower highs on the Fear and Greed Index. Not only with respect to, say, the raw values, but also with respect to the moving average, okay? So, for instance, here, if I were to get rid of it, you can see that the Fear and Greed Index was putting in lower highs for the most part, not all of them, but mostly lower highs, but actually the bottom was more or less the same. But if you go back to the moving average of it, you can see that it was more or less putting in lower highs and lower lows. Okay, so that's sort of the characteristics of a Bitcoin bear market with regards to the Fear and Greed Index. And you can see ever since really February of 2021, we've been putting in lower highs, and we haven't actually been putting in lower lows yet, but I would argue it's only a matter of time. Because even if the price of Bitcoin stays constant for the next 90 days, you're still slowly going to get rid of price sentiment from 3 months ago when prices started to go back up. Okay, so eventually I do believe this will come down even further. Now, Another way to look at this is to get something that doesn't lag so much. And one way that we can look at that is to actually look at an exponential moving average, something that weights more recent data heavier than older data. Okay. And this is something that's also interesting because if you look at the 90-day EMA of the Fear and Greed Index, you can see that it's currently around 35. The lowest it ever got in 2018 was around 24. Or sorry, it's not at 35 right now. It's currently at 25. I meant to say 25. It's currently at 25. But the lowest it ever got in 2018 was approximately 23 or 24. You can see that it came down, though, to around 26 before going back up a little while the price of Bitcoin got relatively constant before ultimately finding a macro bottom on the 90-day EMA of the Fear and Greed Index. And so, I look at this and I say, this is likely going to keep moving down for a while longer, especially considering that prices haven't they haven't yet recovered, and also we're going to start losing some of the data from 3 months ago where prices were starting to go back up. We were putting in higher lows. Of course, we know that in a bear market, higher lows are just sort of a meme, and they eventually do get broken until we finally have our last capitulation. And so when I look at this, it seems a lot more reminiscent of this bear market structure over here than where it is right now. Now, the interesting thing, though, about Bitcoin bear markets, as we know, is that, the prices don't just go straight down forever, right? I mean, even if we're destined to go down further, which is certainly a possibility. I mean, there's certainly no guarantees that 25K is the bottom, and I would say it's more likely that we could go lower than necessarily holding that. But even though that's the case, one of the things that keeps the Fear and Greed Index at bay, at least the 90-day EMA, from going, say, all the way down to 10, is because you get bounces that give people just enough hope before it rips it back away, right? Just enough hope before it just takes it right back and ultimately goes lower or goes back down to the prior low. So you can see that, right? Like the 90-day EMA goes down, and then it goes back up during a pump, and then it goes down and then back up. And you can see that where we currently are, it seems like we should be nearing an area where we might see some type of reprieve in the downward pressure of Bitcoin. We might already be in the process of that, actually, right? I mean, the price of Bitcoin has actually been relatively constant for the last 2 weeks or so, almost 2 weeks now. I believe the price of Bitcoin has more or less just been between $28,000 and $31,000 to $32,000. Hasn't really changed a whole lot. You would have to imagine that if Bitcoin were to just go sideways, then within the next month or so, you would expect the 90-day EMA to probably bottom at some point down here and then start to go back up, just like it did when Bitcoin went sideways later on in 2018. Now, if that were to happen, it would provide some reprieve to the markets. You wouldn't be watching the prices go down every single day, but it would allow some things to sort of slowly reset. And furthermore, if we were to get a bounce back up, then you would see the 90-day EMA of the Fear and Greed Index go back up quicker, just like similar to what Bitcoin did back in July of 2018, following the first lower low that Bitcoin put in. Okay, so again, we know that Bitcoin put in a lower low over here in 2018. And it was sort of putting in higher lows for a while, and we put in a lower low in June of 2018. Then we had a bounce back up to the 200-day by July. And then if you go over to the Fear and Greed Index, you can see that it was in that move in July that the 90-day EMA of the Fear and Greed Index went back up to 36 from a local low of approximately 30. But it just sort of put in lower highs and lower lows for a while. You can see that we're in the process of doing that right now, more or less. Like, high, a lower high, a lower high, a low. I'm not really sure if this was a lower low or not. It looks about the same between, say, this bottom here and then this one, but we are in the process of putting in a lower low. So the thing that I think people need to be careful about is inevitably, whenever we do get a bounce, whether we get it from here or whether we go to the 200-week moving average and bounce, it doesn't necessarily mean that the bottom is in. I think it'll be required by us to do a tour of all of the different macro indicators for Bitcoin to discuss whether it could theoretically be a market cycle bottom or not. But when you look at this, it does show that the 90-day EMA of the Fear and Greed is getting about as low as it's ever been. It's not quite there, but we haven't been at these levels very much, okay? Again, in 2018, we know that Bitcoin dropped a lot more than how much it's dropped so far. Okay, in 2018, the price of Bitcoin dropped approximately 84% from the top in late 2017, about 84% or so. We know right now Bitcoin isn't even down 70% from the all time high. A 70% drop from the all time high would, in fact, put Bitcoin at around $20,000. So we know that it isn't quite as bad from a price perspective, but the reason the fear is so bad right now is because there hasn't been much relief, right? There hasn't been any relief for a long time. We are currently in, if I get off the Heiken Ashi candles, look at this. We're currently in our 9th red week in a row. Before this, Bitcoin had only experienced 6 red weeks in a row, right? 6, I believe, is all we had ever experienced before. But I believe, yeah, we're currently in number 9. Now, there's no guarantee this is going to close in the red. In order for it to close in the red, we need to close the week below 29,000.6K, around 29.6K. If we close below that, then it's likely going to be in the red, it will depend on the exchange that you use, but generally around 29.6K. So the reason I think the fear and greed index is so bad right now, and the 90-day EMA is so bad right now, is because we've had 9 candles in a row where the price has only gone down. Whereas in 2018, if you go back to 2018, we had all sorts of bounces in here. I mean, we had like 3 weeks down, then we would get a little bit of relief, right? Just a little bit. And then the market would just take it right back, right? I mean, it would take it right back within a couple of weeks or so. But this is something we saw time and time again. And so you need to understand that whenever a bounce does inevitably occur, I mean, we'll get a bounce at some point, even though it might not seem like it. Whenever it does occur, it will provide some relief to the 90-day EMA of the Fear and Greed Index. Doesn't necessarily mean the bottom is in. Again, we'll need to take a look at the structure of not only, say, the Fear and Greed Index, and if it's putting in, continuing to put in lower highs and lower lows, but also do a tour of all the different macro indicators, or a lot of them that we discuss. See, could this be a cycle bottom, and could it lead to start putting in higher highs like we did in 2019? Don't think we're there yet. But at some point, we'll see when the bounce comes, and then we'll see if the Fear and Greed Index puts in a lower high, or if it takes it out. If it takes it out, then you could argue that that's a point for the bulls. But so far, the Fear and Greed Index has just been putting in lower high after lower high after lower high, as well as now putting in lower lows. Okay, so I thought this perspective on the market was somewhat interesting, even though we haven't gone as far down as we did in 2018. The 90-day EMA of the Fear and Greed Index is almost as bad as it was in late 2018, close to the market cycle bottom. When it bottomed, the Fear and Greed bottomed around 23.69, and we're currently sitting at around 24.86. Okay, so we'll look to see when the bounce comes. Whenever the bounce does come, we'll see how high it takes us, and how high the Fear and Greed Index goes upon that bounce, and whether it's just another lower high, and if leading to another lower low, or if we think it could be a more macro bottom. And maybe in the next video, we'll talk about the structure of the bear market and what are some likely outcomes there. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Remember to check out the Into the Cryptoverse Premium at intothecryptoverse.com. We do have a sale going on right now. You can lock in the lower rate as long as you do not cancel. Okay. And actually, before we go, I want to show one more thing that might be somewhat useful. We can actually hide all of these and just show the mania phases where the Fear and Greed Index. Sorry, let me go to the color code here. So if I hide all that, there we go. So you can see here where it's showing you the main mania phase is when the Fear and Greed Index is really high. But if we go down here to the bottom, you can see where the fear and greed index is relatively low, and when people are really experiencing the most fear in the market, okay, is when it gets to these levels. The reason why it's not showing up for the lowest band is because this is the EMA. Okay, so if I get rid of the EMA and we just show the values, you can see where they currently are. But the problem with, I think, looking at it like this is there's a lot of noise, right? There's a lot of noise. This doesn't necessarily tell you much because it can just keep going down. But if you take, say, like the 90-day EMA of it, and you can see there's still nothing that ever showed up between 0 and 20. There is between 20 and 30, and you can see where that occurred, right? In 2018, that level occurred right before the bottom, before the final 50% correction, and then at the bottom. It also occurred in their pandemic crash, but again, that was sort of like a black swan event. I'm not sure how much we should focus on that one. But you can kind of see where we currently are. And it's why I think whatever comes next will eventually be a new cycle and not a continuation of the last cycles, because yet again, we're seeing, price deteriorate quickly. We're seeing the Bitcoin dominance go up. All Bitcoin valuations bleed. Ether Bitcoin valuations have been going down as well. So let's keep an eye on that. And I hope you guys like the content. I mean, I really do. We try to make videos day in and day out. So if you like it, subscribe, right? Let's go for 750,000 subscribers. I think we're at 744,000 right now. So we're almost at 750,000, which is a pretty big milestone. So make sure you subscribe, give the video a thumbs up, click the bell icon to turn on your notifications. I'll see you next time. Bye.